weekend. Ira Epstein of Linn Associates with your weekend update, which is always a little bit different. I'll get to that in a minute. But this is Friday, and we're at the 27th of September, 2019. The markets are all closed, and you can see behind me red in the stock indices, red in the metals, too, and we'll get to all this in a moment here. Dollar index, pretty steady, nothing going on there, and a small bid in the bonds and the notes. When we look at the energy cycle here, down again. Now, this was a week full of a lot of news. As soon as Mr. Rouhani, I'm talking the Iranian president, got back to Iran, first thing he says is that President Trump and the other leaders of Europe got together and they said the U.S. would remove the tariffs, go right back to how things were if Iran would talk to them. Okay, I see our president doing that. The next thing that happened today, late, and this is about 4:15 in the afternoon, is Mike Pompeo was just subpoenaed by the House, where they want to ask him about what went on in the Ukraine and get all his notes. I don't know that he's going to be able to do that, executive privilege and so on. Hard to tell how that's going to go, and then the House said they'll consider that an impeachable offense. Then we get to the point where today word comes out that the White House is considering reevaluating Chinese stock listings in America and how the accounting is done, and maybe investments in China made by U.S. pension funds, especially government funds, that might be buying entities that have shares there. That's something Mark Rubio had brought up way back when, a year or so ago, when all this was beginning. However, how much of this is all posturing? How much of this is the noise? And with all that today, I would have thought, honestly, the stock market was going to be down a lot more than it is. I truly would have thought that metals would have had a bid off of a run to safe haven. They didn't get that. The Japanese yen didn't get it. So it is confusing. Now, as I said about 2 minutes ago, we start out the weekend edition in looking at one monthly chart, and then everything else is on the longer picture, the weekly chart. So let's get to that right now. On the monthly chart of closes, for the month so far, we have, another day left in the trading. The market is up 39 points. Now, that's pretty good, and look at how it's ending a quarter. I'm assuming you don't crash on Monday, but it's up pretty darn good, and you got the end of a month, you got the end of a quarter, so it's going to be some volatility coming into this market as we get into the Monday time frame. When we get to the weekly chart, you can see how the market on a closing basis only, that's all this is, I'm connecting closes, how the market got into this resistance zone and it's been having problems there, and now it's backing off, and for the week, the market is down 49 points. That's quite a drop. So you got the month still up pretty good, and it tells you how much of a chunk back we've taken, and still the month has stayed up. On a weekly bar chart, now this has got the high, low, and the closes. You can see how you ran into this resistance zone again. The market is still in a longer-term uptrend if you define trends as having higher highs and higher lows. Well, the swing line shows that that's it. And what a swing line does is a swing line has 5 sets of rules to it. You're looking to see, in order to draw the line to the high or the low of the week or a day, you're looking to see, do you have a lower low or a higher high day? You're looking to see, do you have an inside day? And if so, where did you close? Then an outside day up or down. I teach this all in my charting course, but it's always draws the same way, and I'm not guessing is the market trending or not. Based on the swing line, unless this market were to get right here, and you got to get back under this week's low, which was 28.10 and a quarter. And this current pattern, that's what you'd have to break in order to stop this pattern of higher highs and higher lows. I filter that by looking at a moving average. Now, on the weekly chart, we're looking at the weekly moving average, and I use the 18-week moving average to give me a bias. If the market is over it, I say it has an upside bias. If it's under it, a downside bias. I also look at that number as if the market's down and rallies, as a resistance point, and if it's up and breaks to it, as a support point. So it has quite a bit of value to me. As it's at right now, the market is in an uptrend and the bias is up. I then look to see, are we anywhere near Bollinger Bands? Why? Because 95% of the time the market's going to trade within the bands, not outside of them. Therefore, I look at the band to be a potential support zone on the first hit of it and a resistance zone. And you go back on your chart and play with that, and I think you'll find it interesting. So I have a market that has not gotten to the bands recently, and I look at momentum. Now, in the weekly chart, I don't consider a market overbought or oversold. It's either got up momentum, downside momentum, or sideways momentum. This is a market that still has upside momentum. It could be crossing to the downside, but it hasn't yet. You've got these numbers right here where the red line is still over the blue. It's the K over the D line in the slow stochastic. So it's still pointing to the upside. It's stalling, but it's still pointing there. When we come to the NASDAQ, you have the pattern of higher lows, higher highs. Notice how you pulled back to that red line. I'll refer to that red line as the line in the sand often, because it's from that line that the market often makes a decision as to what it's going to do. It becomes a stall point. Excuse me. So we were up, we're pulling back and stalling here. Unlike the S&P, momentum has turned down in this market. Where did we close? We closed at 77.01 and a quarter. The 18-day average is 77.06 and a quarter. So while the swing line is up, it's negated because the bias is down, and now momentum, which often leads price, is trying to turn down. In the Dow Jones, you have higher lows, higher highs, uptrend. Momentum, similar to the S&P, has been pointing up, hasn't yet gotten to the point where the red is crossed up onto the blue under it and pointing back down. So momentum's still up, and support, I would say, is 26,528, the 18-week average of closes. In the Russell, as you see, you were down pretty hard this week. The market has had a lot of trouble each time it's gotten and played at this green line, the 100-week moving average closes. Sorry for being wrong on that, 100-week, and starting to slip back here. You are not trending in addition. You have a lower low, higher high. So on the weekly chart, this chart is what I'd call a mess. It's neither up nor down, just sort of moving back and forth. In the VIX, we're coming back to this 18-week moving average of closes at 21. That's a fairly high number. This is a market that the higher it goes, it tells you the more volatile the market's becoming. The trend is down, the resistance is 21, and momentum, well, it's pretty flat right here, just sort of drifting on you. In the 10-year notes, we have a market that was up to the upper Bollinger Bands and in a heck of a bull run. If you'll remember, we were taking interest rates further and further to the downside, and the 10-year got to the 1.4 level. Then we started a correction, and we went back to that 18-week moving average, that line in the sand. The market has held it, and it's trying to get a bounce. Should this get under 128.02, the trend would turn down. Why? Well, to get there, you'd probably have to break and have a pattern of lower highs and then the lower low. Number two, you'd be under the 18-week average of closes, and momentum would likely not try to go flat on you like it's doing right now, turn back down. But you're not there. So where you're at right now is neutrality in this market. TLT, very similar to our 10-year. The higher high, the lower low. It didn't quite make it to the 18-week average, as you can see. It had a heck of a run towards it, but missed it. That low would have been 135.39, and you got to 136.54. Not too bad. You're getting a little bit of a bounce, but not trending. Very similar to the 10-year. And in the dollar index, while the daily charts have taken off and out of the sideways action of the Bollinger Bands, you haven't done it yet on the weekly. What the weekly has here is a pattern of a lower low and a higher high. Momentum is pointing up. Bias is up, but I see resistance at 99.29. Each time we've hit the 18-week upper Bollinger Band, you can see how it's pulled back. We finally got more of a rally out of the daily one than we did out of the weekly. In the Eurocurrency, the trend is down. Lower highs, lower lows. Downside target could be the 109.27 area. To negate the downtrend, you've got to take out last week, not this week's high, but this high of 110. 110.35, 110.03 and a half. I take that back. 110.03 and a half. Now, from where you're at, it's not that far away, but we'll see what it does here. There's something not right here. The high, I knew I was reading the wrong number. 114.80. Got it. So it has to take out I'm still reading it wrong. 111.48. I know I need my glasses. 111.48, and then we come all the way back down. So we're far away from it. I'd rather do that, not see it, and then give it to you that way. In the Mexican peso, the trend down. The daily charts had been up. They caved in this week on the daily charts. The trend on the weekly to the bear side. Lower highs, lower lows, momentum down, bias down, resistance 51.20, and we're looking here at 49.75 as the possible downside target. In the Canadian dollar, it's been a battleground at the 18-week average of closes. You haven't gotten away from it, and each week that goes by, we're getting closer now to the election. Will Mr. Trudeau be able to get another term? That is going to be the question, and I think the market is hanging in there. It doesn't know. There's been a lot of chaos there, just the way we have it in America. In the Japanese yen, you have the higher high, lower low pattern, and now for 3 weeks in a row, the market is stuck at the 18-week average of closes. Not a trend, just hanging here looking to see what to do next. In Bitcoin, you've given up this big rally up towards the 14,000 level. You came down this week to the lower Bollinger Band. You finished at 8,000, just about $300 off that low, but the market got down to the point where there's some support from the lower Bollinger Band. Remember, you only stay out of the band 5% of the time. It hit it, and it's trying to support itself there, but you have the momentum down and the bias down. In the energies, well, need I tell you that would you have possibly thought that we get into a situation where the Saudis get attacked 2 weeks ago, the oil field gets pretty much hurt bad, refinery knocked out half the production that they had. They claim they're going to be back into full production this week. We'll see. And this is all you get out of that? Not very much. This is pretty surprising. That's my point. All you did when you look at the bigger picture, here you are, and now you get the attack over the week of the field. You go up to the Bollinger Band 100-day. The hardest thing in the world is to follow your chart. I am sure and probably you said, oh, this market's on its way. $100 oil could be coming. What if they get hit again and so on? The market instead reverses course on you, and now look where you're at. You're down back to $61. You're back to where this whole thing began from. It's like it never occurred. Amazing to me. When you look at WTI crude, the same thing. You got up to the 100-day and the upper Bollinger Band on it. And again, traders, I'm certain, they're piling in. Oh, this market's going to run. Right back down to that 18-week average. This is where this market and this market are going to decide what they actually do next. Back to the 18-week average. Rebob gasoline, the rally to the line in the sand. No trend. You broke out of it when you took out this high, and you're just stalled in the market. You have momentum up, bias down, no trend in the market. Heating oil got up with the obviously with the crude as the market got hit from the Saudi situation, and now it's giving that up too. Look for support at the 168.14 level. This market is the one that I think traders are going to start to focus on because of winter coming at us. You know, one of the things I like to talk about is what I do in the morning for traders, and let me explain this. I put out a morning update that's this way. Not the charts you're seeing behind me, more studies on them, and I'm going to cover the markets in one video, all these markets, 45 total charts. It's going to have 40 futures, 5 ETFs. There'll be a slide bar that you pull and it'll light up metals, interest rates, whatever section you're on, and there'll be a lexicon on the side of it right through here. So you get to the area that you want. In this video, what I'm able to do is I am able to sit there and say, I want you to buy here, I want you to sell here. This is what I think you do. But there's more to it. Because I do this early in the morning, I'm up at about 4:35, and by the time I start recording, I've already read what's going on in Asia. I have a pretty good idea as to what's going on in Europe, and I can talk to you the reports that are coming out in the morning. I'm giving you a feel for the day before it gets going. This video is typically out by 7 a.m. Central Daylight Time. The purpose of it, ideas. Maybe you're questioning your trades. Maybe you are saying, I wonder if he's got the same feeling I do. What about the energies? Maybe I'll be saying, look at where you're at. You're up at the Bollinger Band. The market only stays above it 5%. Who knows what I'll be saying. The cost, $7.95 for a 30-day trial. Come on. A tick in gold is $10. A tick. Corn, just as an example, $12. So you just play with it. The whole purpose here is to see if you like it. If you do, yeah, you can decide, do you want to stay? It's 30 days at a time, or you can buy 1 year prepaid up front for the equivalent of $13 per 30 days. Your call on it. But at this price, I'd love for you to try it and see if it fits your style of trading. If so, just go to our website to see more about this. Go under the word research. You'll see it. Go to morning subscriber video. It'll take you the rest of the way. It'll explain everything, and you sign up there. Or you can click here if you're watching me on YouTube. Have a great weekend, all. I'll see you on Monday.